Ever wonder why gold is so valuable? Let's dive into the origins of the gold standard. Ancient civilizations like the Egyptians used gold in trade because it was rare, durable, and beautiful, qualities that made it perfect for currency. By the time of ancient Rome, gold coins were widely used in trade, helping establish a stable way to exchange value. But the actual gold standard came in the 1800s, when countries like the UK tied their currency directly to gold. This meant that, in the UK, a pound could be exchanged for a fixed amount of gold. Other nations soon followed, creating a global system where currency values were based on each country's gold reserves. This standard brought stability to global trade by ensuring consistent exchange rates, allowing economies to grow with a solid, trusted base. Gold became a foundation for trade, building trust and stability in finance, something we still value today. So why did the world abandon the gold standard? The story starts with economic strains from the Great Depression and World War II. These crises put immense pressure on countries to spend beyond their gold reserves. In 1944, the Bretton Woods system was created. It pegged the US dollar to gold at $35 an ounce, with other currencies tied to the dollar. This allowed more flexibility, but as the US took on massive debt in the 1960s, especially from the Vietnam War, maintaining that gold peg became harder. By 1971, inflation was rising, and people were trading dollars for gold at alarming rates. President Nixon took the US off the gold standard, ending dollar convertibility to gold and letting currencies float freely. The takeaway? Governments needed flexibility to respond to crises and growth, which strict gold reserves couldn't support. Today we live in a fiat currency world, where money's value is backed by trust in governments, not gold. The gold standard's impact on modern fiat currency. When we left the gold standard, economies shifted to a fiat currency system. Unlike gold-backed money, fiat currency isn't tied to any physical asset. Its value comes from trust in the government. One advantage of fiat money is flexibility. Governments can print more money or adjust interest rates to manage the economy during crises. But there's a downside. Without limits, printing money can lead to inflation, where the purchasing power of money drops. This shift to fiat also allowed for more government spending, but it's led to rising global debt. Today, countries rely on fiat currency to fund programs and stimulate growth, but it comes with risks of currency devaluation and instability. Moving to fiat currency gave economies room to expand and adapt, but it also introduced new challenges in maintaining stable currency values. So why do central banks still hold gold reserves if we're no longer on the gold standard? Gold remains a critical asset for financial stability, even in a world of fiat currency. In recent years, central banks in countries like China, Russia, and India have been buying up gold as a hedge against economic instability and to reduce dependence on the US dollar. Gold offers a safe store of value during times of market uncertainty because it isn't tied to any one country's currency. These reserves provide a buffer for central banks. When economies face inflation or currency devaluation, holding gold can help balance out risks. It's a way to diversify and protect national wealth, even when fiat currencies fluctuate. The takeaway? Gold still plays a vital role in today's global economy. For central banks, it's more than a relic of the past. It's a strategic asset for managing financial security. What does the future hold for gold in a world driven by fiat currency? Some experts believe we may see a return to gold-backed assets, or even digital currencies supported by gold as concerns about fiat currency stability grow. While a full return to the gold standard is unlikely, gold's role as a safe haven asset is here to stay. With rising global debt and economic uncertainty, investors and central banks continue to turn to gold to hedge against inflation and currency risks. Digital currencies backed by gold are emerging as a possible middle ground, providing the stability of gold with the flexibility of digital assets. As economies evolve, gold may find new relevance in these modern financial innovations. Gold will continue to be a pillar of stability and security in the global economy, adapting to new financial systems and technologies as the world looks for trustworthy assets.